This is the story of a guy who went to war with Wall Street. Not for himself, but for the average person, for people like you and me. He invented something that has literally saved investors trillions of dollars. But here's the twist. His idea became so powerful, so dominant, that in the end, even he started to worry that he might have created a monster.
And it all boils down to this one simple but absolutely brilliant insight. John Bogle realized there was this invisible enemy, this force that was quietly bleeding retirement accounts dry. And you know what? It wasn't crashing markets or picking the wrong stocks. It was something much simpler: costs.
You see, for decades, the entire investment world was basically built on a system that made Wall Street rich, often at the expense of everybody else. And their secret weapon? Fees. These tiny little percentages buried deep in the fine print that just didn't seem like a big deal.
But over time, oh man, their effect was just devastating. This chart right here shows Bogle's tyranny of compounding costs perfectly. That little 2% fee doesn't just cost you 2% a year. No. Over 30 years, it can vaporize almost half of your potential money. Why? Because you're not just losing the fee itself, you're losing all the future growth that money would have made. It's a total wealth-killing double whammy.
The whole system was selling this promise, right? Pay these smart, active managers a high fee, and they'll beat the market for you. But here's the dirty little secret. Something Bogle actually figured out way back in his college thesis in 1951. Most of them couldn't do it. People were paying extra for results that were actually worse than average.
So this is where the whole story flips. Bogle didn't just complain about the problem, he came up with a solution. And it was so simple, so obvious in retrospect, that it was completely revolutionary. It was an idea that was about to turn the entire financial industry on its head.
The seed was planted with that college paper back in '51. Then, fast forward to 1975, Bogle starts a new kind of company, Vanguard. And get this, he structured it so the company is owned by the investors themselves. This just completely removes the whole conflict of interest. And then, in 1976, he drops the big one, the very first index fund for everyday people, the Vanguard 500.
So what the heck is an index fund? Honestly, it's pure genius. Instead of paying some Wall Street hotshot a ton of money to try and find that one winning stock, the needle in the haystack, Bogle just said, forget the needle, let's just buy the whole haystack. An index fund simply buys all the stocks in a big market index, like the S&P 500. Boom! Instant diversification for almost no cost.
And just like that, there were two totally different ways to invest. You had the old way, active investing. Expensive, complicated, and let's be honest, it usually didn't work. And then you had Bogle's new way, passive investing. Simple, clear, and most importantly, incredibly cheap. You weren't paying for a star anymore. You were just getting the market's return, minus a teeny tiny fee.
You can imagine how Wall Street felt about this. They hated it. They called it Bogle's folly. The very idea of just accepting the market's average return was called un-American. His first fund was a total flop. It aimed to raise $150 million and got just $11 million. The entire establishment was sure this crazy idea was destined for the history book's trash bin.
Well, the establishment was dead wrong. Bogle's beautifully simple idea started to catch on, bit by bit. It sparked this huge grassroots movement of investors who just loved his common-sense approach. They even got a nickname, the Bogleheads.
And the Boglehead way of thinking really comes down to these four core rules. First, invest on a regular schedule, and don't overthink it. Second, be absolutely obsessed with keeping your costs low. Third, own everything, the whole market, to spread out your risk. And fourth, and this is the hardest one by far, when the market is going crazy and everyone is freaking out, you do absolutely nothing. You just stay the course.
And that phrase became Bogle's gospel. It's probably the most important piece of advice he ever gave. Because he knew that the biggest threat to your portfolio isn't a bad economy, it's you. It's your own emotions. A good plan that you actually stick to is way better than some perfect plan you ditch the second things get scary.
Okay, so Bogle's revolution is a huge success. The little guy is winning. But this is where the story takes a really unexpected turn. Because his idea didn't just succeed, it completely took over. And that incredible success created a brand new problem, one that nobody, maybe not even Bogle, saw coming.
I mean, just look at the numbers. They're staggering. In under 10 years, passive investing basically doubled its slice of the pie, making up nearly half of all the money in U.S. funds. Trillions upon trillions of dollars moved from those old, expensive funds to these new, cheap index funds. The Boglehead way wasn't a secret club anymore. It was the mainstream.
But here's the thing. All that money didn't spread out. It flowed like a river into the hands of just a few massive players. Because they were the biggest and had the lowest costs. 3 firms, Bogle's own Vanguard along with BlackRock and State Street, ended up dominating this new world of passive investing. Now, the scale of this is mind-boggling, and it creates a really weird situation. See, when you own an index fund, you don't personally vote on things at the companies in the fund. The fund manager does it for you. And what that means is that the big 3 have effectively become the single largest shareholders with the most votes in pretty much every major company in America.
Let me give you a simple way to think about this. Normally, Coke and Pepsi are enemies, right? They're always trying to crush each other on price and advertising. And that's good for us, the consumers. But what happens when their biggest shareholder is the exact same company? If Vanguard is the top owner of both, do they really want Coke and Pepsi to get into a brutal price war that tanks profits for the whole beverage industry? The worry is that this common ownership could quietly make the entire economy less competitive.
And this brings us to the most fascinating part of this whole story. The one person who saw this potential problem growing, who started to get worried about the world he had created, was John Bogle himself.
On the one hand, you have this. This was his entire life's mission, his crusade, as he called it. Everything he did was about fighting for the little guy, about ripping costs out of the system so that ordinary people could finally get a fair deal. This was his true north.
And yet, listen to him here years later, sounding a completely different alarm. He's openly warning that if this trend keeps going, we're going to have a massive problem. He says straight up, "I don't want a handful of people to control the voting of corporate America." He was afraid of exactly what was happening.
And that, right there, is the Bogle paradox. The very invention that was supposed to be the great equalizer, the tool designed to give power back to the average person, may have ended up doing the exact opposite, concentrating an unbelievable amount of power and influence into the hands of a tiny few.
So let's just trace the journey we've been on. We started with a huge problem. High fees were destroying people's wealth. Then we saw Bogle's brilliant solution, the index fund, a cheap and easy way for anyone to invest. But then we saw how the incredible success of that idea led to this new reality of concentrated ownership by the big 3, which now forces us to ask some really tough questions about how our biggest companies are run. Which leaves us with this final, really tricky question. John Bogle gave the world an incredible gift, there's no doubt about that. But in solving one massive problem, did he accidentally create another, maybe even bigger one? It's a complicated legacy, and it's something we're all going to be grappling with for a long, long time.